Incoming mail.
Good morning, everyone, and welcome to today's market color session. My name is Sabiabi, and I'll be taking the first part of today's analysis, which will be covering commodity currencies. I see a couple of us online. Good morning, good morning. It is so good to have everyone here. How has this week been treating us so far? Let me know. Let's catch up a little. How's this week treating us? Hi, Mr. Ayuba. I see you. Mr. David, I see you. Those of us on YouTube. While we're typing, let us see what these asset classes have in store for us today. So like I always say, I'd love to implore us to please not get confused by the many indicators on the charts. They may be a bit intimidating at first glance, but I promise you it is not. What you want to do is to take note of the price points that would be marking out during the course of this analysis, and then you can now add it to your own analysis and take advantage of what it is that we see here today. Okay, so we're starting from AUD/USD on the H4 time frame. Now remember that on Thursday, I said I was looking at AUD/USD selling, and I even said I was looking at areas where it was even going to break through and sell a bit more. Now look at that. AUD/USD has been delivering exactly like we discussed during our last analysis. So for the sake of those of us who were not part of that session, I'm going to just go ahead and delete everything and start from the top so you can catch up with what it is we are seeing today. So AUD/USD right now, what is it am I saying? What exactly am I saying right now? Zoom out. Now, when you look at the major structure of AUD/USD, you can tell that this guy has been buying for a while. When you look at the most recent price movement, price has been giving us what? Lower highs and lower lows. Now, price came here, it ranged a little. Right now, price is currently stuck in some sort of range around this zone, from somewhere around the 30th of September all the way to here. AUD/USD has been in some sort of range on the H4 time frame. But when you come on the H1 time frame, you see that regardless of all of that, price has still been giving us moves that we can catch. Now, looking at this, right, I said I was looking at AUD/USD selling downward. And I went down to H1 time frame and I marked out specific price points where I thought price was going to trade into. These price points being the first one right here, which is inside our trend indicator. This is our trend indicator first. And then second price point is where price has currently just violated. Right? So looking at this, now this is where price was likely trading to here. And then the other one, price already violated it too. So we've seen a break below this zone and that break below this zone. So 0.66065 has been violated downward. Second point of interest being 0.65910 has also been violated, or is currently being violated as we speak. Now, looking at this, I'm thinking that because price moved with so much momentum and left some inefficiencies in the way, price would eventually go back, because the market likes to move with efficiency. And if price moves with so much force that it leaves gaps, then there's a very likely possibility that it will go back to fill that. Please give me a second. All right, I'm back. So there's a likely possibility that price is going to eventually come to fill the fair value gaps. These inefficiencies or imbalances are what we call our averages. So price is likely to return into these zones before we see more push downward. But again, that doesn't mean the market cannot trade all the way like 100 pips forward before it eventually returns into that zone. What we do know is that eventually this imbalance is going to be filled. Now, where exactly are those imbalances? Just give me a second to get my tool. So you see here, we happen to have what we call an IOFED, fair value gap here, fair value gap here. Then we have another fair value gap right here. Another fair value gap here. So price is likely to return and tap into this at least 50% or 100% before he now starts to trade lower. There's also another fair value gap between this candlestick and this candlestick. So this sell happened with so much force, man. It just kept tanking. So I'm going to mark that out as well. These are now levels I'm thinking price should return into. If you come to H4, remember that when using these all-weather indicators, we always say that if we see sunshine printed, then the move that is in vogue is currently wearing out. What do you see on the H4? There is no sunshine yet. Because there is no sunshine here, it makes me to believe that there is still momentum for the sell to keep digging deeper. So because of that, you now may see why I'm expecting if price should retrace, it's going to be retracing into these zones, and then we'd see more sales. Sales into what level? Price will now most likely trade into 0.65609. If this makes sense and it is clear, please tell me in the chat box. Do you understand the analysis on AUD/USD so far? Please tell me. So you see that this is even a combination of a tiny touch on market structure in confluence with our indicators. So price should return into this zone. So now let's go to the M5. What am I going to be doing on the M5? I just want to locate my resistance and support levels that price could trade into to respect. Now, how do we come about these support and resistance levels on the M5 time frame? By simply marking out yesterday's high, yesterday's low, day before yesterday's high and low. So you see that yesterday's low happens to be in some sort of confluence with our H1 point of interest, 0.65910. Okay, then I'm going to go ahead and mark out yesterday's low, day before yesterday's high and low. Now, this chart is starting to look very choked up with this point of interest I just added, but no issue. We're leaving it like that. We want to see what price does at these zones. So these are now my levels that I'm looking out for. I'm zooming out so you can see the bigger picture. Please take note of the price areas where I drew these POIs at if you do not have the indicators on your own chart. So perfect. I'm now saying if there's going to be a buy, which is a temporary retracement, you're most likely going to retrace into this one. If this previous support happens to turn to current resistance, then we're going to be seeing AUD/USD sell into what zone? Somewhere around 0.65765. You can see the point that we drew out. Let me go ahead and draw that out properly. You'll see that it's almost at that price point I spoke about. So if these levels hold, we're going to see AUD/USD come and react from this zone. This is a support level that could still act as another support again when price eventually returns into that zone. However, if price breaks through this level, this is our next level we're looking at, or this level, or this level, this or this. You understand the concept behind point of interest, of course. So this is what I'm now looking out for AUD/USD. And even if price happens to trade into this level, if it eventually trades into this level and then starts to retrace, we still know where it is going to be retracing into. It is still retracing back into this point of interest that we marked out and targeting our H1 POI, which is 0.65609. Now let us look at NZD/USD, starting from the H4 time frame as well. Major structure has been to the upside. Looking at minor structure, you'd see that price has been giving us lower lows and lower highs. Sunshine printed, hence why you're seeing these reactions continuing downward. Now, I'll go ahead and delete this like I did for AU for the sake of those of us who were not here last time. So this is giving me bias that NZD/USD is going to keep selling. And if you're also on our mailing list, you remember that we put out a mail on Sunday telling you that our bias on the XY was to see buys. So if the XY should keep buying, then our bias on NZD/USD continuing to sell makes even more sense. So H4, this guy is pointing downward from our minor structure. and then H1. What levels am I marking out on H1 now? Now, when you look at NZUSD, it's quite different from what we saw on AU. Why do I say so? On AU, our point of interest happens to be downward. But in this example, you see that we have our trend indicator on the upside. What does this now mean? It means that if we're going to see NZUSD begin to give retracements before the minor structure being formed on H4 is continued, it is likely to continue to buy from here and tap somewhere into 0.58724. Do you understand? Now, let's go on M5. But first, let me zoom in and see if we have some imbalances. We do. Similar to what we did on AU, we happen to have some fair value gaps. IOFED. Is this an IOFED? Yes, kind of. Now, I'm going to mark that out because it is possible that if NZUSD is going to give us that temporal buy retracement, it's only simply going to tap into these imbalances and continue to sell. It is likely that it will not buy all the way into these zones. That's the idea behind points of interest. So zoom out now so I can have a better picture. Let's see, this is POI1, POI2. So this fair value gap, yeah, or rather IOFED, mark it or draw it into today's price movement. And then I'm going to go ahead and mark out this level as well. Okay, so you now see the levels I'm looking out for on the H1 time frame. Let us see what price does when it starts to give us that temporal buy. Are these levels going to hold? And then for M5, again, what are we marking out? Yesterday's high, low, day before yesterday's high, and low. Support, resistance, previous support that could act as future resistance, or support that could hold, or resistance that could hold. That's it. Quite straightforward. Okay. So let us now see what price does. All right, this is what I'm now watching out for. These are our points of interest. We already get the idea behind having different POIs. Let's go to USD CAD. So we can now touch on indices before we call it a wrap for this morning session. Zoom out. You see that we have points of interest that has been here since last week. I'm going to go ahead and take them off. So major structure downward, minor structure is gradually forming to the upside on USD CAD. Sunshine printed, so we expected this temporal sell to occur, but sell into what zone? Temporal sell we expected to happen was to continue trading into what level precisely on H1. This is a point of interest. You know how we always mark out our POIs. This is also a point of interest where price is currently reacting off of and this. So price is starting to react off of this level, which served as one of our points of interest from previous analysis, and from where price tapped into to how it is moving now. Doesn't really do much. These are 14, 15 pips, not worth a lot, right? So price is now reacting from this level. Let's go on M5 and mark out yesterday's high and low. So you see that there's a confluence with our H1 point of interest right here, 1.39446. So this is what I'm watching out for these different asset classes. If you have any questions, this is the perfect time to ask me. For a quick recap on USD CAD so you understand, I'm saying that if the support level is going to hold, we're going to see USD CAD continue to buy from this point of interest. What could serve as resistance will be seen on the M5. This is a possible resistance that could push price down. However, if USD CAD is able to break through 1.39665, then we're going to be seeing USD CAD trade continued to the upside. Does that make sense? However, if this holds and we start to see reactions downward and USD CAD breaking below, then we may see temporary sells into this point of interest or this point of interest. I believe this has been helpful to us. If this was helpful, let me know in the chat box. If you have any questions, please go ahead to ask. All right, thank you so much for joining this session. We'll go on a very short break, come back to continue our analysis on indices. Don't go anywhere, we'll be back shortly. Cheers and God bless.
Good morning, everyone, and welcome to the second part of this market call this morning. We'll be looking at the US equities market, S30, NAS 100, and S&P 500. See now, the market is doing this morning. Very shortly, I'll be sharing my screen, and we'll be looking at the markets together. Let me load up my screen. Okay. So the market has been interesting since the beginning of this week, even from last week, with the whole US shutdown and the rest. We've been seeing different reaction across board in the market. Quite strange. All right, let's start with US 30 first. We're having a whole lot of reaction in the market. On the daily time frame, you can see that we are bullish, right? However, with the candlestick printing, the bullishness now is relatively getting weaker compared to how strong we're coming from, right? So we see price pushing to the upside. This is on the weekly time frame. We've seen price pushing to the upside strongly. Let me put it on daily. We've seen price, pushing strongly to the upside. Last week had a massive rally to the upside. And with what we have on the higher time frame is still very much bullish. However, candlesticks are now becoming more bearish. They are beginning to print bearish candles to the downside. Give me a minute. Okay. All right. So from here, we can see that there's a clear break of structure, right? There's a clear break of structure on the daily time frame. On the daily time frame, if you're not sure about it, use your line chart to see. Line chart shows that it's clear, right? A clear break of structure, and then price is coming back. We have this entire range to work with. This entire range on this zone, this fib level to this fib level, right? And so you want to buy at discount and sell at what? Sell at premium. Price is currently in a premium level. So if you're selling into 50% or into 81.6 and 8.60 fib level, right? I believe that makes a lot of sense, right? On the daily time frame, while we have all of this happening, we also should be very in tune with what is happening overall, which is that the market is still bullish. And then fundamental is kind of tilting towards being a bearish and neutral bearish situation because of the US government shutdown that happened, right? But then nevertheless, the market is still very much bullish, right? Especially tech stocks. They are really rallying to the upside. On the 4-hour time frame, let's look at what is happening. In the 4-hour time frame, this is what we see currently. I remember we marked out this zone last week. It didn't pull through. Price didn't get to this other block before it, continued its movement. And then we later marked out a level around here, but then that was invalidated. But then let's look at what we have this morning in terms of pure price action. On the daily time frame, we have this entire range we want to work with. On the 1 hour time frame, let's see, I marked out this level, I think it was on Thursday or so, right? But then price eventually, what was this, on Monday, came into the level and then violated the level, strongly, continue movement. Violated the level, then closed above that level again. So it's giving me an idea that this might be a what? A mitigation block. A mitigation block. Typically, a mitigation block is another block that is violated. Price closes above that level, right? Price reverses and then closes above that level. This is what I mean. Violated the other block, then reverses, closes above that level, and then we expect continuation to the upside. But then, why this is true, I'm looking at the other flip side of this market, which is price. We just cleared a level on the daily time frame, right? We've broken structure in the daily time frame, and then this price is beginning to, come back to equilibrium, 50% for it to continue its movement. And also look at the nature of the candlestick. These buy candlesticks, they are not really as strong as what we had when we're moving to this point. We have a whole lot of ties between buyers and sellers. Of course, now ended up with buyers being strong in the market. I mean, these indecision candles, the first, second, third, and then price struggle, pushed up. Now, pushed up violently, and then it was rejected almost 50%, right? Rejection, even up to 50% rejection, and then actually now closes as a bullish candle. So it's signifying to me that most likely buyers are beginning to come into this market very strongly. Naturally, I believe October should be a month where the market rallies, because from even seasonal tendency, it shows that equities rallies during October, during the month of October, November to the end of the year. We see that smooth rally. It has been like that for years, right? But then now with what is happening, US government shutdown and the rest, probably that might be why we are seeing like a deviation from the norm, which we'll keep monitoring, because at any time this market can correct back and start moving the way we want it to do, right? So what would I be looking at this morning in terms of actual opportunity to buy this market? I want to see how price reacts from this level, right? I want to see how price reacts from this entire level, this one being the first and then this being the second. If I, okay, this, yeah, if there's a break above, a break below this before, say, 1 o'clock, 1:30, then I would expect a more sales to the downside. But then if I don't see a break of this zone, right, I would believe this mitigation block most likely is going to hold, right? And then even if it does this drama into this zone, and then we see something like this to send it to the upside, that is what I'm envisioning. Of course, you don't try to guess the market, they guess the reaction of the direction of the market. You just want to react to what is happening. Nevertheless, I'll keep my eyes on this chart, right? And then be watching what happens before 1 o'clock, right? Or before New York markets open. Because whatever it is, if we see if price maintain a strong bullishness around this zone, then we should see that rally to the upside. We should see that rally to the upside, because looking on the left-hand side, there's nothing in terms of mitigation that has not happened yet. All areas, this was the area that has not been mitigated. Now it has been mitigated. Even this fair value gap has been mitigated, right? So expect the markets to push up to the upside. However, the only reason why it wouldn't do that is because of the rejection we're having on the daily time frame, which might be priced. Okay, so even this, our stop loss is around 50% fib level, right? Our stop loss is around 50% fib level. So I want to see how this actually reacts, right? I want to see how it reacts in this market. So once that is done, let me ensure I'm not missing anything. 30-minute time frame. Let me see if there's any area. You see? Okay. This actually mitigated this 30 minutes order block. This 30-minute order block has been fully mitigated. So interesting. I'll be watching how this market is going to react, right? And if for any reason I see a bearish movement, a strong bearish movement, now there's a whole lot of things happening here. This is another block, a sell order block. right? With a lot of inducement, enough inducement to send price to the downside. I think I'll be looking for both buy and sell scenario today, but my sell scenario will be very, very, what's it called now? I won't be holding it for long. I'm very sensitive with the position, the sell scenario. Okay, interesting. I'm using the Gann box tool to measure the fair value gap. This fair value gap from this to this zone, and this is above 50%. So this looks valid. This looks very, very much valid for me. But price might not come all the way to this zone. It's very practical. Price might not come all the way. But if for any reason it comes, right, that we see a push to this zone, I want to sell it off a bit, right? I want to sell it off a bit. But if price does not actually come into that zone and then violate all of this, then I'll be looking for buys below here. I'll be looking for buys, probably a 15-minute order block, a 15-minute fair value gap, something that would just give me a buy setup to the upside, because it makes sense to take buys from below 50%, 61.8, 78.6, right? I believe I'm making a whole lot of sense. All right, that being said, let's move to US 100. That is NASDAQ. NASDAQ has been bullish. I know that one for sure. Tesla, the report on Tesla was quite significant. They surpassed everybody's expectation and the numbers of cars sold. So you could even see that reflecting on their share price, right? Yeah, right. I think the last time I checked, they are $438 per share. That's quite impressive. Tesla went as low as 226 thereabout, middle of the year, right? And now they are really back up from that all-time low, right? No all-time low now, but the low of this year. All right, so we are bullish on US 100 across board. We are bullish on the daily time frame. We are bullish on the weekly time frame. Also, it's bullishness all the way. All right, so on the 4-hour time frame, let's look at what is happening. On the 4-hour time frame, the market also has broken structure to the upside. Market has broken this structure to the upside. And then on the 1-hour time frame, this looks like a fair value gap that has not been tested significantly. Okay, coming. On the 1-hour time frame, let's look at what we have here. On the 1-hour time frame, they are still very, very much bullish, actually. Still very, very much bullish. The only thing now is this low that's not been broken before. Price attempted to break the low, but we've not seen that break of structure yet. Not yet. All right. We've not seen that break of structure yet. And for that reason, I will just be on US 30. There's really no place for me to enter this market from. Let's look at 30 minutes. There are really no significant area for me to enter the market from. And for that, I might just pause on US 30 this morning in terms of taking actual position in the market. US 100, sorry, US 100, and wait for my US 30 play to actually, prime up. But for US 100, nah, it didn't pick this other block that sent price to the upside on US 30. Look at this, it didn't pick the other block. So price coming back here again can be very, very significant. Can be very, very significant. Sorry for the noise, the background noise. We have a lot of traffic across the floor area this morning. Okay, so price can as well tap into this. This is a very significant level. You have the first area here. The second one is this fair value gap that was intentionally left behind, that's not been tested before. Price can as well tap into this fair value gap for it to continue pushing to the upside. But this looks kind of valid to me this morning, right? I have a break of structure to the upside and then another break of structure here, but then price have not broken the structure yet. We have a failure swing here. Price failed, this swing failed to break this previous swing. So but then hasn't also broken the low. So for that reason, we just have to be patient because there are two things involved. Price can as well just continue this movement, break this, and then continue higher low, or it breaks this to the downside, come into this level and then continue its movement. All right. So for US 100 this morning, that's the Nasdaq. I might just have to sit out this one in terms of not taking any trade particular on this market, using it as also confluence, except if before New York market open, I see something significant, 100. All right. Let's look at S&P 500, which is the last one for today. Almost the same position with US 100. S&P 500 and US 100 had the same price action. So we have this happening, right? Price has broken structure to the upside, and then this break of structure in a way is kind of warranting the retracement a bit, broken structure, right, to the upside. Then you're seeing a retracement to the downside a bit. 4-hour time frame. Okay, 4-hour time frame retracement, and okay, let's come to 1 hour. 4 hour is nothing really clear. There's not so much happening on the 4 hour, even on the 1 hour. There's not so much happening on the 1 hour, right? Like in the range actually, right? Because there's no break of this low, there's no sweep of this high. So all of this drama in the middle is just in the range. We have to see a clear, like I said, on US 100, that's Nasdaq. We have to see a clear break, right, before we can engage this market properly, right? So that will be all for this morning. Let me know if you have any question in the comment section. Let me know if you have any question in the comment section. Anna, David, Ezekiel, Mangot. Wow, it's been a while, Mangot. If you have any question this morning, we'll look at it together, especially on this asset class, right? S&P 500, I'm looking at, taking a buy. Also buy, and I'm looking at both buy and sell this morning. So, but for US 100 and for S&P 500 and US 100, I'm sitting out. US 30, I'm looking at buying the market and depending on what price does before 1:30 New York session. All right. Thank you so much. See, there are no questions. Thank you so much for joining this morning. Anna, David, Ezekiel, Mangot. We'll see you again by 2 p.m. Nigerian time, just to see how the market has moved and to see if our analysis are still in place or we have other change of bias. So I wish you all a trading. Cheers and God bless, guys. Thank you for joining.